Welcome. My name is Andreas Tesch and I'm the Chief Market Officer of Atradius, a leading global credit insurer. This is the third webinar in our series of virtual events looking at the major issues impacting businesses and trade around the world today. Today we will be discussing the impact of digitalization of trade. It won't come as a surprise to you that recent reports from the OECD and the World Economic Forum show that digitalization throughout the world has massively accelerated during the pandemic. In some sectors, digital transformations that would normally have taken years have been completed in just a few months. So what does the digital landscape look like now? I'm delighted to welcome a fantastic panel, of which two are long-standing clients and partners of Atradius. I would like to introduce you to our moderator, Daisy McAndrew. Daisy is an experienced journalist and former economic and political editor for the BBC, Sky News, ITV, and Euronews. Welcome, Daisy.
Andreas, thank you so much. You're quite right. This is the third. You can't get rid of me now. I'm just part of the furniture now. As Andreas said, two of whom are long-standing colleagues and clients of his. The amazing entrepreneur that Andreas mentioned is Jean-Marc Noël, co-founder and CEO of Trusted. The leading provider in the area that Andreas mentioned is Fredrik Wittemans, Executive Director, International Credit at Ingram Micro. Then we also have on the panel Dirk Hagener, on the home team side, Atradius is Director of Strategy and Corporate Development. And finally, David Rowan. We're so delighted to have David. He was the founding editor of Wired, the UK edition, an early stage investor in technology startups, a prodigious author and expert on the area we're discussing today. So very, very warm welcome to all four of you. David, I want to come to you first, just with a sort of broad picture. Look, we've seen reports recently from World Economic Forum, from OECD, showing, as Andreas was saying, that digitalization is accelerating so much, has accelerated so much during the pandemic. What does that mean insofar as trends that might be impacting trade? What does this speed mean?
It means the inevitable suddenly becomes immediate. In the last year, we've seen our schools suddenly realize they have to jump 20 years. Our dentists have had to develop a digital strategy. Our synagogues and churches have had to find ways to connect people through Zoom services. And yet at the same time, the way that goods move around the world, the way that real trade happens at scale has still lagged behind. But we're just at the beginning. And there are whole areas where systems are being built using machine learning, data analytics that are going to be huge in areas such as climate emissions monitoring. Every company is now under pressure from regulators, shareholders, and customers to be carbon neutral and accountable. So I think from the dentist to the biggest corporates, there's no way of avoiding an inevitable growth trend that if you engage now, you're going to save yourself a lot of pain in a couple of years.
Well, that's certainly a very big overview and a lot to think about. And of course, we all know that it can't and it won't all be good for everybody. So we'll talk about that in a little bit. Jean-Marc, Trusted Shops is your organization. And we know, as Andreas was saying, you've been absolutely key in this area for many years. But perhaps explain to us a little bit your business model and how the trends you're seeing now, what are the trends you're seeing now in e-commerce specifically?
Thank you, Daisy. Yeah, when I started Trusted Shops back in 2000, we had a vision. The vision is a digital world we can trust. I think we have still a lot of work to do there. And so our mission, our goal is basically products and services to enable that trust between people and businesses. And lastly, we are giving a bioprotection guarantee to consumer while buying online. And this combination creates the trust. And today, we are seeing more than well over 1 million purchase transaction through our system every day. So that has been a massive acceleration we saw with COVID, as mentioned by David before. Actually, as far as trade and e-commerce is concerned, you can see that in 2020, you leaped forward 5 years, basically. And you mentioned the trends, and I would just pick 3 trends I see in the last couple of years. The first trend is digitalization that changed completely the way people trust. And it is so fundamental for trade. That's the first thought. And the second thought will be, as we mentioned before, software is eating the world and is breaking up value chain. And as far as is really disrupting retail trade, everybody wants to go direct. Everybody wants data. And the last trend, the third trend I see is the way people work has just changed fundamentally. We see new leadership, we see new flexibility, we see really an explosion of remote tools as we speak today. That's one, maybe something that wouldn't have happened 1 or 2 years ago.
I'm going to come back to some of those issues in a minute. Before I do, Frederick, just to bring you in as a global player in IT distribution, you've seen many of these transformations. What specifically has impacted the way that you trade or your supply chains?
Well, things have changed quite rapidly, and there's huge demands in cloud platforms. Related to that, cybersecurity is becoming extremely important. You see also that e-commerce is getting bigger and bigger. So we are really seeing what I would call a dematerialization of the way business is happening, or you can call it as well, everything as a service. So you go from hardware as a service, software as a service, and this obviously has a big impact on the way the supply chains are being organized.
Obviously, we know that advancements in technology have changed the way that all companies manage receivables, and we know there are new business models. But what about in your area, in credit management?
Would basically elaborate a bit what Jean-Marc has said as one of the biggest trends, which is data. I mean, that's something which we are equipped in insurance, but we have also a lot of, let's say, challenges and opportunities at the same time around that. Then we have more sources, which is one thing nice, because we can then be, let's say, better do our work, our receivables management, our cover. But on the other hand, how much we can trust, for example, social media. We have technologies like web crawling or machine learning and text mining, which helps us there. But it is a question how much we can wait. For example, information. David mentioned already the question around environmental footprints, which are absolutely relevant for a company in the future. But how we access that towards a financial information risk. So something which will also bring challenges around that. So far, I mean, this is something which at least we see in the receivables management. We don't see very much a big new landscape of new players. Still relatively clear that the main companies are driving the change in this area. But what also is clear that we need to keep the pace, and platforms and ecosystems are at least challenging us. It's in the moment not a fundamental topic, but I think it might well be a question of not yet.
David, I'd love your view on that. And also just going back to, I mean, do people automatically feel distrustful of the cloud, let's say, or of people harnessing or gathering their data? Or is that a demographic issue? Do younger people care less about who has their data?
I think it's the opposite. I think if you have a transparent system where you're clear about how the data is collected, stored, and used, you have a lot more trust than you do in the old world, where there were faceless organizations that seemed to take liberties with your data. Now, something significantly more important is happening with the financial world. There is declining trust in government's management of fiat currencies. When you have the US president and others pumping in trillions of dollars of newly printed money into the economy, people are worried about inflation. They're worried about what the real value of their asset is. That's one of the reasons that cryptocurrencies have been booming in recent years. Now, in the trade world, in the world of business-to-business transactions, there are all sorts of new formats for engendering trust. There's the growing use of open APIs so that data feeds from one company's database can be safely used elsewhere. I think the risk comes when regulation is lax and those trust systems are compromised by short-term commercial interest.
And Jean-Marc, I'd love your reaction to what David was just saying there about trust, because obviously trusted shops is, it says it in the title, but also what I was saying earlier about the growing pains that might come with this very fast acceleration and what that, if that does bring problems with it.
Maybe first to react to what David was saying on trust. I mean, it's important maybe to first understand what is trust. Why is it important? I mean, it's a kind, I would say it's a lubricant that is helping you to do in your social world, in social life, and the economic life. So trust is really important. And it's important to see that technology change really the way people trust. If you look at the evolution of trust, you had first the trust in the person, which was, would say, the local trust. And today we're moving to the next step, which is a kind of decentralized trust. It means that the power is shifting from brands to connected individuals. And this is where all companies need to figure out how to react to that. And one of the ways to react to that is to understand nearly in real time what my customers are thinking about my company. And how do I connect those experience data with my operational data to make something meaningful out of that, to react quickly, to solve problems, to improve your product and your service in a continuous way.
I think you're absolutely right. It is such a big change for a lot of people and daunting, quite scary. Frederic, just coming back to this issue, of course, one thing that's happened over the past year is we might be more connected digitally, but we've never been less connected in the real world because we've all been forced by the pandemic, not we've all, many of us have been forced to work from home. And I just wonder if you have any idea, if it's too early to tell yet, how that might affect business models and new talent in a digital world.
Well, what we certainly have seen is that we were surprised by the winners and the losers of the pandemic, in a sense that some companies have been much quicker to adapt than others. Now, it is important as a business to understand who you're working with. So there is, this aspect of the business that should not be forgotten. Yes, it might be digital, but the person-to-person discussions through Teams or Zoom or whatever you want to use has become increasingly important, very much so. The adaptation to e-commerce is definitely another one where, it has required us to change the way we think and the way we approach. We had to use a lot of data information internally as well to adapt, understanding, okay, the IT sector went pretty well, but the customers of our customers might have been in trouble. So we need to understand that and also to talk through that. So big data usage has become suddenly so much more important internally and externally to guide, our internal, but also our external colleagues, through the change that we are seeing today.
And David, I wonder if you've given any thought or whether you have any opinions on what potentially might be the unexpected consequences or the unintended consequences of this new way of working. For instance, will it affect different demographics different? Will it affect men more than women or vice versa? Or how might it affect hierarchies of business? I wonder if you have any thoughts on that.
Firstly, it puts a new pressure on leadership to define the culture of the organization in a way that doesn't demand a coffee machine in the middle of the room. So how do you create a distributed, decentralized culture that helps everybody understand the values of the organization as well as today's aspiration. Secondly, it allows you to tap into talent that's much more diverse in more locations, but also with more diverse educational backgrounds, with more diverse cognitive abilities. The other challenge for a traditional organization is hierarchy no longer works in a decentralized world. When every member of your team has the potential to feed back new behavior patterns in your customers, new demands from the front line, it's no longer relevant to have people at the top telling everybody else what to do. You need feedback loops. You need to empower people at every level of the organization. Technology is on that exponential curve. Machine learning is becoming a commodity. Artificial intelligence is becoming a service. Everybody is able to take data from infinitely cheap sensors and use that to track things in the factory production line, in people's health, that we weren't able to do 2 or 3 years ago. So how do you keep challenging yourself in the organization as to how you're using these new digital commodities, because that's what they are, to give yourself a superpower, an unfair advantage?
I'm very interested in what David was just saying. Dirk, if I might come to you. Obviously, we're all only just beginning to understand how this boom in digitalization will affect us, whether it'll be short-term, whether it'll be long-term, and whether it'll change the course. How do you think it'll affect your market, credit insurance?
You talk about data about the course, and that's, I think, a very relevant part of receivables management, because I think our processes are very admin driven, and I think Frederick will not here. And I mean, to come to a, let's say, data driven world where we have all processes completely efficiently and less admin is still a way to go. So we need to build on this. So I mean, the data which we have in the moment available can be better used, can be smarter used, but I still believe that the expertise of people, that the relationship of people in such a business is still key. Because again, I think also Jean-Marc mentioned that trust is something which I believe is still much more than only having smart machines talking to each other. And we have invested in this that technology. We use web crawling and text mining, but I still believe that we are making in this moment our underwriters better, because they don't need to look that deep in information anymore. So what we need to do is getting rid of the administration, but working on value creation. And there, I think people are absolutely key for building this trust in our proposition.
David, we've had a question. Question here says, are there international institutions aligning with governments instead of organizations setting their own standards?
There are international conventions that seem to determine what's happening. There is a decentralized movement that starts the process off, and then big institutions, we are starting to see even the Davos type crowd, the G7 type crowd, wanting to try and take some control back from the decentralized crowd in order to make sure that incumbents don't lose out. And I think sometimes there is an entirely new power base being created. Decentralization is going to be really quite significant, and it's not necessarily going to be dominated by all the old financial institutions. So creators are going directly to the crowd. I think the wider trend of decentralization is going to shift decision-making from some big companies to the ecosystems that need the services those companies have.
I hate to say too much, but if those ecosystems are new and aren't understood by regulators and they're therefore unregulated, doesn't that bring a danger?
Regulators tend to come in too late and too heavily. They're too slow often to monitor what's happening. Now, some people are not very good ethical people, and they try and break every system for their own advantage. And trusted reviews of products and website is a system that's pretty easy to break. There are factories of people writing fake Amazon reviews because it works. How do we ensure that the regulators act quickly, but also the companies that host these negative reviews, the Trustpilot type companies, the Google and Facebook type companies? When you have big monopoly companies, they don't like being accountable, and that is a problem in a democracy.
I think, Jean-Marc, I'm going to have to let you come in on this.
Yes, I mean, fortunately enough, I mean, absolutely right. But I just wanted to tell you one example and one idea. If you are not doing anything and you're not caring about your reputation, you got on the internet what I call a passive profile. And that passive profile is most of the time a negative profile. The reason for that is, why would people use their time to provide a reputation, to write a review? People who are happy with your services would take less time to just post a review on Facebook or Google also. So in the end, you end up with a reputation which is rather negative. So you have to do things. And fortunately enough, there are possibilities to do such a thing.
Frederick, I want to ask a couple of questions that are related to you. One question which I hear a lot these days is, how do companies prevent excessive investment in IoT? And I guess I would add on that, maybe not excessive investment, but backing the wrong horse. And secondly, just taking that forward a bit, Frederick. So how do we avoid too much investment or the wrong type of investment, and what should we be investing in?
Yeah, well, that's a complicated question. Investments in IoT, well, I think there are specialists in the world who can help you with that. And IoT, you know, one of the big challenges is the data center sitting behind it, if you talk technically. So you need to find also the right partners and the right security to have access to those data and the right capacity at the same time. So this is definitely, I believe, you know, one of the answers to that. Not everything is going to be IoT driven, I'm quite sure. And there will be a lot of security questions behind that too, and these will have to be answered in terms of the right security solutions around any kind of electronic device that is going to work with that.
Thank you. Shouldn't we first think about optimizing our processes before heading to an evolved digitalization?
I would say this.
Well,
yes, from my side, because I think I mentioned it already earlier, that I think we have still a lot to do on homework side. I mean, in credit insurance, credit management, receivable management has still a lot of admin to do. Admin is absolutely the focus in the moment. I think efficiency and also the way how we work together with the companies, with the partners, but to create the value, and that I think is also something which we need to bring, and especially the expertise we have. Is then, let's say, not only digitalization. So I think digitalization will help us very much in the efficiency side at this stage, and then to create value is something we need to still have our people to work on propositions which are attractive in the receivable management market.
And David, I'd love to ask your view. Often, I think people over the last year have felt that they're struggling to keep up with the pace of change, which is totally understandable. We've discussed that. But now, as we perhaps catch our breath and look forward to the next 1 to 5 years, are there certain things that you are confident are going to continue to evolve, or will be the next big thing?
Automation, machine learning, and artificial intelligence is clearly going to be dominant for all sorts of industries. Quantum computing and new forms of massive data processing in real time is going to be huge. And I mentioned carbon pricing and climate change to the way we account for what a company does, as well as financial accounting. We're all going to have to start carbon accounting. Again, that becomes a data collection, a data analytics and behavior change challenge for organizations. But I think the risks are, if you don't keep up and look outside your organization and hire a diverse team, that sees what's happening on the ground, you are at risk of becoming Kodak, of becoming a company that focuses on yesterday's successful, profitable way of doing something as digital realities radically change.
Well, I hope that what we've done today is helped anybody at risk of becoming Kodak turn the corner, because certainly all four of you have provided some really, really valuable insights and thoughts and predictions. So my thanks to you.
Thanks, Daisy. And also I would like to thank all of our panelists and you, Daisy, as our moderator for this thought-provoking discussions. I hope that all of you listeners have taken a couple of learnings from this. This has been a very challenging webinar as the topic is very wide, but I think we pointed out some very interesting aspects about the importance of trust, about the scope of the changes that digitalization is going to bring. There are going to be lots of ways to innovate and lots of challenges, but also opportunities. And the key task is to size these opportunities for us as Atradius on behalf of our customers, but also for all of our customers. The final event in this series of webinars for Atradius is called Deglobalization, a new way of trade, but will it stick? In our very first webinar, we had a discussion whether there is actually a deglobalization happening or in fact the opposite. So it's going to be another very interesting session, I believe. It will take place on June the 23rd, and I hope that you can join us. It was my pleasure to bring this session to you today, and thank you for joining. I look forward to seeing you at the next event. Thanks.